you all once again to our final virtual event of this year, Managing PPP, the Aftermath with Scott Craig. I am Tejo Sahasrabuddhe. I am the Executive Director with Thai Austin. Today's topic of discussion is very timely. We will discuss and hear about where we are after 7 months later since PPP and what to expect next for this program. But before that, a little bit about Thai Austin, especially for those who are not aware of Thai Austin. A warm welcome to all of you. Thai is the largest entrepreneurial organization in the world. We are in 19 countries with 61 plus chapters globally. Thai fosters entrepreneurship via mentorship, networking, education, incubation, and investing. Some of the key programs that Thai Austin offers are for women, Vive la Femme entrepreneurs, the TYE, the Young Entrepreneurs for both high school and college, and Thai Austin Angels Initiative beginning 2021. Thai Austin Angels will invest in underserved startup businesses. You can find out more about each one of these on our website under Initiative button. Our chapter also works with the City of Austin to help small businesses and international startups. Our website is austin.thai.org. I encourage you all to visit, and if you are not a member of Thai Austin chapter, please consider becoming one. Before I introduce our moderator, some of the housekeeping rules, please. All attendees will stay muted throughout this webinar. If you have any question that you would like to ask, please type in under question and answer section. Questions will be addressed all throughout the webinar. Please keep feeding your questions to us as they come to your mind. Now, I take the pleasure in introducing our Thai Austin Charter member, Tejas Vakil, who will be moderating this webinar. Tejas is a serial entrepreneur with 40 plus years of experience and is a technology executive. He is currently on his sixth startup, a CEO of Permission Networks, a fintech company. Besides his technology business, Tejas enjoys playing tennis and golf and follows any and all sports. He is an active member of Concord Coalition, a nonpartisan organization that advocates for fiscal responsibility in the US. He is Texas Fiscal Lookout. Welcome, Tejas, and at this point, I'll turn it over to you.
Okay. Thank you very much, Tejal. I appreciate it. And uh, thank you, everyone, for joining. I know it's a little difficult on a work day to finish your work and join, so really appreciate everyone joining us this evening. The topic of today's discussion is the Payroll Protection Program. Where are we at right now? This was a program that was established in the spring, in the early spring, as part of the CARES Act. And the fundamental part of it is that it is an SBA, a Small Business Administration administered loan that helps businesses keep their workforce employed during the COVID-19 pandemic. I won't go into a whole lot of details on it because I would like to introduce our speaker. I'm delighted to introduce Scott Craig. Scott is a partner in the Austin office of Wilson Sonsini, Goodrich, and Rosati. He has a very broad experience in multiple industry sectors, especially those that are within the focus areas of the Austin community: technology, life sciences, high growth sectors, as you can see on the chart. He also works across a fairly broad range of legal areas. Especially interesting to the entrepreneurship community here in the ecosystem are the areas of M&A and of equity and debt financing. He is a proud Longhorn, JD with honors from the UT Texas School of Law, and has been named among the leading lawyers for business by Chambers USA. So with that, Scott, thank you very much for being our featured speaker this evening and for joining us. Let me start out first, just if you would give a brief sort of overview of the PPP program and then your specific involvement with the program.
Sure. Thank you, Tejas. Appreciate that. Yeah, when everyone got sent home in March, and you know, I think everyone was worried. What's the economy going to look like? What's going to happen? Pretty quickly, Congress passed the CARES Act, and what came out of that was a PPP loan. That's one of a number of a number of pieces of the CARES Act, but it's the one that affected us in our community the most. And so we scrambled from the outset to kind of understand what it meant, to understand, if our clients were the right type of companies to receive the money that's from the loan. As you are probably aware, the loan is a forgivable loan if you at least a portion of it, if you meet the requirements of the loan as it relates to keeping people on your payroll over the course of the period that the loan was meant to cover, which is essentially an 8-week period from the time you received the loan. At the time, it was you were getting essentially, I think, 10 weeks of pay for an 8-week period, and that was meant to cover not only payroll but also things like rent and utilities. Again, most or all of it could be recover or forgivable depending on the whether you kept the employees on. So the biggest headache here is we'd all been through this before, 10 years ago with the last sort of SBA loan program, and had a number of clients that were venture backed, specifically, that had funds involved with them, seek these loans. We had after the dust cleared, and as clients were trying to pay these back or get them forgiven, the SBA came in and said, look, you guys shouldn't have applied for these loans. You've got and these venture-backed companies were, we've got 50 employees. What are you talking about? Well, the SBA rules are very complicated, and one of the complications there is if a VC has certain controls over a company, or any fund or any person has certain controls over a company, then all the other companies that person has similar controls to are imputed to the company seeking the loan. And we were involved heavily with the National Venture Council Association back in the spring, lobbying the Congress as they were coming up with the rules after the CARES Act was passed, to try to ensure that, one, we were hoping the affiliation rules would get waived. They weren't. But to create a clear path for venture-backed companies that still really fit the criteria that, or the spirit of what this loan was trying to, the companies that the loan was trying to protect, could get this money. And so when the rules were finally passed, it helped create some clarifications. There was still a lot of confusion, but one of the things we did for a lot of our companies is we quickly changed the corporate governance on a permanent basis to help them get these loans, to make sure that their employee number was under a certain headcount. So there were some other things that were done to try to ensure that these companies that were our clients, that really were meant to receive these loans. If a company was in the middle of raising money from its investors, if a company had just raised money, if a company was flush with cash, well, what did that mean as it related to the ability to get money from the PPP program? That was a question that the SBA almost purposely didn't make clear, although they tried to, and they created some confusion with a number of FAQs over time about what type of companies that might have been venture-backed or private equity-backed could actually receive the loan. So these were the headaches we were dealing with. These were the warnings we were giving boards with respect to taking on the money at the time, is that, particularly if you're taking on a very large loan over $2 million, when the SBA said, we're going to audit you, you need to make sure that you met the certification in the loan that you needed this money in order, it was critical in order to continue ongoing operation, which is what the certification said. What that means is unclear. And I think we're going to see some of this come to light as the audits of some of the larger loans start happening. So I'll leave it at that, Tejas. Did you have a follow-up?
No. So what I think that's a good overview. I think right now, for our audience, clearly, the mechanics of the program are somewhat less important right now, because the date has expired. That went past in August, right?
Sure.
So the 3 or 4 key issues are: one, for those that have already applied, uh, what is the process, and how do you go about the whole forgiveness
Hmm.
part? So that is one. The second thing is, obviously there are a number of people, number of companies that have not been able to participate in the program. And so then the question is there going to be, or is there an expectation that there will be a new version of the PPP, which is expected,
Hmm.
as part of the stimulus bill that is coming? And then obviously there is, you brought up the issue of the fact that there are certain companies that did participate in the PPP, but who might be at risk of being audited because they may have already had access to funds through investors or lines of credit or other
Yeah.
areas. So I think those are some of the key things that are interesting. So can we dive straight into the first thing, which is,
Yeah.
the forgiveness part, because I think there are a number of questions that people have regarding that, and people are interested in figuring out, how they go about that.
Sure. And it's funny, we're in the middle of a few acquisition deals on both sides where we're dealing with banks on forgiveness. And from what I understand, I'm guessing there are probably some examples where people have actually gotten the forgiveness, had the forgiveness come through. But for the most part, banks have put portals together, and there's a forgiveness application that's been put out by the SBA for people to complete. And a lot of companies have completed them and submitted them to their banks, but are still waiting on clearance through whatever portal they're using. And you know, different banks are approaching it differently. I mean, I think some of the larger banks obviously have some online portals where you can fill out the forgiveness application and submit it. And some smaller banks may not. It may be a more manual process for them. But what we are seeing, at least universally with our clients, is no one's actually gotten the forgiveness yet. A number of people have applied and submitted to their banks, but whether it's the banks slow rolling it until they get more comfortable with how the SBA is going to that the SBA is going to actually pay them back, or it's going to be, or whether it's just a logjam of applicants and it takes a long time to get through. It's really unclear, and I think it's different from bank to bank. But my suggestion for companies that want to seek forgiveness that took out money is get the forgiveness application in with your bank as soon as possible. Have a personal connection to that bank if you can. I mean, if you already have one, great. If you don't, try to find out who you need to talk to so you can get clarity on what you need to do. Because what we found, especially as we're buying and selling companies that have PPP loans, is that the banks have been universally unhelpful. They don't want to make a call. They want to rely on the SBA, and the SBA is only going to put something out about once every 2 or 3 weeks, and it's not necessarily going to solve the problem. And so banks are very hesitant to make their own calls on this.
Yeah. So, one question that I've had actually 2 or 3 people ask. By the way,
Mm-hmm.
just a quick housekeeping note for the audience. If you have questions, please use the Q&A tab on the Zoom, at the bottom of the Zoom panel, to enter your questions. I know a number of questions are also coming, I think on the chat piece, but I think the Q&A piece would be a good place where we can take a look at it. But one question that a couple of people have asked is, what are the tax implications of the forgiveness program, or the forgiveness part of the program? If the loan is forgiven, is that a taxable disbursement to the company?
I think it's unclear. I mean, I think our advice was it probably early on was it probably would be a taxable event. I think there's not been guidance here as to what's going to happen and how it's going to be treated when people are doing their 2020 returns next year. If it was any other loan, if your lender lent you money, let you spend it, and that money was forgiven, that would be a taxable event for the company. It's basically, it's ultimately income. But in the past, the SBA has, and with the alongside the IRS, made accommodations for that. But I'll be frank, I've not dug into this particular issue yet, but my understanding is it's still unclear.
Yeah,
And that's
I saw.
one of the big problems is one of the big problems is that a lot of companies didn't even think about that going in and took out very large loans. And they're not going to be cash flush to be able to pay the taxes.
Yeah, so the reason is that I saw a statement from a couple of months back that Steve Mnuchin, the Treasury Secretary, made, where he committed to having the Department of Treasury and the SBA put out a statement clarifying the tax implications of the forgiveness.
Mhm.
But I searched long and hard here in the last day or so, and I haven't been able to find anything that explicitly states what the tax implications of this are. So I think if I understand your question correctly, then I think to our audience, I think it will be that, if that is a concern, as I'm sure it is for most of you who have taken the loan, would be to monitor it on a regular basis. And if we find out any information, then we'll certainly send it to the folks that are attending the seminar, uh, because obviously that's a big issue regarding the
Yeah, I
loan.
mean, it is, and it's been, again, it's one of the many frustrating things about PPP, because I don't know that we're going to get any clear guidance given the transfer of power, like of the administrations, that between now and when people have to start filing their tax returns. So hopefully something, and again, it's very volatile, and it's very fluid. So it's very possible something came out this afternoon regarding it. But that's our view has been it's unclear at this
Yeah.
point.
So let's talk a little bit about just the process part of it. Just in
Mhm.
general, one of the questions is what is the due date by which the forgiveness applications have to be in?
Yeah, I think it depends on when you took out the loan, and I'm not sure the exact due date. But what we've been telling clients is get it in as soon as possible. I mean, I think a lot of our clients were ready to submit last summer before the banks were ready um, for the forgiveness applications, and that was one of the frustrating things. Is we had a lot of companies, we warned them, but they like, we'll take this loan out, and in 10 weeks we'll get forgiven. 6 weeks after the 10 weeks is up, and we'll be done, and we'll be clear of it. They're still waiting on forgiveness, and um, if you once you have you've gotten through sort of your 8 week period, which they extended, I think, to 24 weeks.
24.
I think, yeah. So you've got shortly after that, you should file for forgiveness, and if only to get in front of the line. Yeah.
Okay, so let me just give you, I think that while you were talking, I was just
Yeah.
quickly scanning some information. So in answer to this, the question is that, the borrowers may submit a loan forgiveness application anytime before the maturity date of the loan, which is either
Yeah.
2 or 5 years, but the borrower has to apply for loan forgiveness within 10 months after the last day of the borrower's loan forgiveness covered period. Now, the covered period is typically the period, whether it's 8 weeks or 24 weeks. It has to be from the 10 months after that. So what I would tell the audience is that if you are applying for forgiveness, make sure that it is within 10 months after the end of your covered period of your loan, whether it is 8 weeks if you took it before June 5th, or 24 weeks if you took it after, or if you took the 24-week option.
I mean, I think the other thing to consider is eventually, I know they've extended it, but eventually you're going to have to start paying interest too. And I don't know that if you file for forgiveness after you started paying your interest, whether you'll get that money back. So, we've been encouraging people to as soon as they can to apply for forgiveness, knowing that it still may be months before it's officially forgiven. It gets them in the queue.
Yeah. Is there, are banks charging, I mean, are the lenders charging for the PPP? I mean, are they charging fees? They're not supposed to, from what the SBA has said. But do you know if that has happened?
I haven't seen that. I've seen just a lot of unresponsiveness, and whether it's not, again, it's a combination of not wanting to make any calls they're unsure of and just being overloaded. But I've not seen any banks actually charge fees.
Yeah, according to the definition of the program, they're not supposed to charge fees. I
Yeah.
assume that if they
Yeah.
have any costs, I assume that they may send the bills to to the SBA.
Yeah. I mean, the banks are supposed to get reimbursed. I don't, I don't know if their legal fees, to the extent they're hiring lawyers, are going to be reimbursed, but they're not supposed to be passing anything on to the borrower.
Do you know if when people file the forgiveness and application, do you know that, how do they calculate the total compensation? Is it based on gross amounts, net amounts, or benefits included?
Certain benefits are. Let me see if I can find my old calculator here. It's let's see here. Trying to, I had a list. So, salary, wage, commission. It is gross. It's before withholding, right? So yeah, salary, wage, commission, vacation, parental leave, group health care benefits, payment of any retirement benefits, and taxes on the compensation of employees are some of the things that are included when you're trying to figure out that max number you could have gotten. I mean, but that's really in determining the amount of the loan.
Right.
The amount of the forgiveness is essentially the employee headcount fraction times your loan. So it really does, the amount of your loan is based on your payroll costs, and those are the components that help you determine your payroll costs. But the amount of the forgiveness is essentially the amount of employees over the period of the loan divided by the amount of employees for sort of the test period that you used, prior to the loan. I think there were a couple different windows you were allowed to use for that.
Right. And so one question, one of the questions from the audience is that a lot of online accounts and attorneys are recommending that until everything is clarified, you don't submit the forgiveness application. From a Wilson Sonsini standpoint, are you recommending to your clients that they apply for the forgiveness right now? I think you said that a little earlier.
Yeah, I mean, so I'll be completely honest. We are not in the weeds on the forgiveness applications for our clients. That being said, where we're running into issues with forgiveness is when clients have an impactful event for their company that
Right.
they can't do it without getting a consent from the bank, the lender, and part of that consent, there's the forgiveness application has to be completed. I don't know that there's, I mean, the process of the forgiveness, I mean, and the application, they're going to ask you how you use your money, et cetera. If you use the money the way that you were supposed to, that was one of the things that was fairly clear, I think, from the outset. It should be that fraction. I don't know that that's going to change much. And so, similar to when we were trying to get the loan, if you really needed the loan, you needed to race to your bank because of you didn't want the money to run out. And I think it really depends on how quickly you need forgiveness. And if you don't, and you want to wait it out and see if the form changes or see if there's different criteria. I mean, I don't think they're going to change the calculation. It would be a very material change to what the expectations were when people took this loan down. But I just think you just don't know what's going to be in front of you as a company where you're going to need to have that forgiveness train rolling, or you're going to have to pay the loan off.
Yeah. I saw, reading about it, I saw a quote from one senior SBA official who, and this is for the audience in response to the question that was asked, and that they are recommending that you do put in the forgiveness application in, partly because there's likely to be some latency and some delay because of COVID, because of the changes in, with the administration changes coming. But I also think that if it is the Biden administration coming, I think it's very likely that they will push Congress to have basically a tax-free forgiveness. But again, that's not clear yet. And so take that with a grain of salt.
Yeah, and to circle back on one of the other things you mentioned earlier, I think there's probably going to be a program of some sort, and the thing is it may look nothing like this. So I think we're getting a lot of questions about, are they going to redo PPP? Are they going to do it all over again?
Right.
And I think there will be something like it in whatever the next stimulus package is, whether you call it CARES Act 2 or some. But there's a lot of cloudiness and mistakes and other issues with this loan, especially what was clear to us as we were diving into it is not a lot of thought was put into the more hardwired SBA rules that were in place. And when you compare it to the type of companies that were seeking out this loan, and the hope is that maybe if they do it again, they'll be able to do things like waive affiliation rules. Although I doubt that will happen based on the folks that were pushing back on it last spring. There's there's some things they can do to make it clear up front. I think, as with all historical kind of SBA emergency loan programs, there's always going to be a lot of hair on it. And again, we last spring, and we'll do it again this time, is we'll convey to our clients, you really got to understand that if you take this money, there could be negative consequences, or just there are a lot of uncertainty related to it, as we're seeing play out right now.
Yeah. So can you address this issue of what are you telling your clients regarding, under what circumstances is a borrower likely to be audited?
Sure. So I think there's a bright line rule that the SBA came out with, which is $2 million. If your loan's more than $2 million, you're gonna get an audit. And Politico actually put out an article a week or two ago, maybe it was closer to the end of October, where some companies are already receiving a 9-page questionnaire from the SBA on why they took the money out and how they used it if they're over $2 million, to try to get at the question of whether they truly did not have any other avenues to receive funds.
Right.
A number of our venture-backed companies, they jumped at this, and then the guidance went back and forth for weeks on whether they really should take part in this. And I think every company has very different facts, but the way we looked at it is, we needed the company to go, or the board of the company to go to their investors and say, will you put more money in us in a fashion that's not like heavily dilutive and punitive to the other stockholders? And if the answer was no, then it got us a little bit more comfortable that there was a need. They could go seek the PPP loan, because the second question is, if given what the pandemics wrought upon that particular company, if we don't get this money, whether it's from our investors or from the SBA, will we have to lay people off, and will it have, is this money necessary to continue ongoing operations? And so that's the second question. And so a lot of companies kind of got there by saying, based on our forecast and the way we expect our business to get hit as a result of, just the macroeconomic environment, we will have to lay off a bunch of people if we don't have some infusion of capital. And we feel that that's the purpose of this loan, is to keep people employed. And so they took the certification of, the money is needed to maintain ongoing operations, as having to lay off a significant chunk of our workforce is not maintaining ongoing operations.
Yeah. So, again, I think that, going through some of the archives on bulletins put out by the SBA and some of the business press, I think that what they were talking about was, one, that obviously if you had borrowed more than $2 million, you can expect an audit. But below that, unless there was some egregious violation of the rules, it was unlikely, because partly the SBA is not like the IRS. They're not actually geared for audits, and they don't have the personnel. And then, with the administrative transition, COVID, everything, it's going to be only the worst examples. However, it is something that I think people need to make sure that they are within the lines, I assume.
Yeah. I think one of the flags may be, I'm only, nothing's come out to say this, and hopefully it won't be one. I've got a number of companies that are excited because the whole thing's going to get forgiven. And, and if you look at the math behind the loan, at least initially, it was meant to have about 80% of it be forgiven. And so I think that there are practical, real scenarios where headcount increased, or the baseline that you used was that you were allowed to use was at a time where you might have, like for instance, perhaps in late 2019 you had a lower headcount and things were going well, and in the first quarter of 2020 you hired a bunch of people. Well, if you can use the 2019 baseline to get forgiveness, you might be fine. I think the issue is if you went out and hired a bunch of people during sort of the period that the PPP loan was supposed to cover, and you're using that as is full-time, as your full-time employee number to seek full forgiveness. It's possible that would be a red flag that would potentially be an audit, because the money was not meant for it wasn't meant to allow you to go hire more people.
Yeah,
and yeah,
I agree. Actually, and this is not an audit issue, but for me personally, there's the issue, I mean, of a moral hazard, because you know, trying to be fiscally responsible or trying to advocate for fiscal responsibility, you know, I didn't apply for our company because I felt like we had sufficient funding, although we could have used the funds from the PPP, but we were trying to be responsible. And it is a little disconcerting when you see companies that are basically looking to take advantage of taxpayer dollars, when the reality is that, you know, only if you need it should you take it. But that's neither here nor there. One more thing from a mechanics perspective, just for the audience, you know, in June, they passed, you know, the PPP Flexibility Act, which extended the date for rehiring people. They extended that, you know, from June 30th to December 31st. So, you know, that allows people a little bit more flexibility in the program. It also increased the amount of non-payroll expenses that are open to being forgiven from 25 to 40%. So I think that the program itself has been made more flexible because I think there was demand for it and people weren't using it. But that is certainly something that people should be aware of. Just a general question, Scott, from the perspective of your clients, has the PPP been a success, would you say?
Yes. So far, I've got a handful of clients that all had more than $2 million. And so I'm crossing my fingers that, I mean, I think they all had a real good reason to take the money. We had very long deliberations, multiple board meetings to ensure that we were doing the right thing, but you just never know how the government's going to act. And, so I do think it's been a success in keeping people employed. The biggest headache, and I guess it's good for us lawyers, is making sure that we did it, our clients did it right. I mentioned the affiliation issue before. That was a real problem if you were a venture-backed company. And if the SBA investigates you, like more than the audit, if there's actually an investigation, even if you did nothing wrong, it is going to be a pain. And so, we've had clients that last time around, after, during the TARP period, the post 2009, that had SBA investigations, and it's a pain. It's slow. It's just there. And then obviously, any kind of default with the SBA is kind of a red flag. You got a 7-year window before you can take any more SBA money. For instance, so I think it has been a success. I want to see my clients get their loans forgiven to be able to say for sure. Although, again, I think most of our clients took that money understanding that if it wasn't forgiven, there's still pretty good terms, right? It's a long payoff period and, small interest rate. Actually, the payoff period wasn't as long as we'd hoped, but it's small interest rate.
Yeah, it's been pretty good. I got a question here actually on a text message. Are you familiar with the other part of the CARES Act? The question was, how does the PPP compare with the EIDL program, the Economic Injury Disaster Loan?
Yeah, so the EIDL's a little different. One, the money's coming straight from the SBA. It's not through a bank. And two, we, depending on how much you need in the idle loan, there was a security interest component to it, a lien component to it, and or a founder or a shareholder guarantee component to it. It was really meant for companies that like that had to shut down, or would have had to just shut down. Now, I had a number of clients take that money too. Frankly, there was a way you could take both loans. You had to thread a needle to an extent, but it was possible. But obviously, that loan's not forgivable. It's a little bit higher interest rate.
Yeah,
The amounts of the loan
3.7,
were,
yeah, I think it's
yeah, but
3.75%.
yeah, the
And
amounts were usually smaller. I think if you look at sort of the three levels, and I don't even know if the Main Street program's really gone into effect yet in any kind of substance, but you had the idle loan, which was really for much smaller companies and really beyond uh, the things that the PPP was trying to. The PPP was mostly for payroll, but it was also going to cover rent and utilities. Yeah, the idle loan was to cover everything else, all those other costs, and if they were harmed by the pandemic.
I think
Uh,
only $10,000 of that is forgiven in the idle program.
yeah, it's like that's right. It's a small amount.
It's a very small amount.
And there's a comp, and it's been 6 months now, but there's a pretty complex sort of hoop jumping process to be able to do both the idle and the PPP.
Yeah. What is for PPP borrowers, clients of yours and others that you've seen, what are the M&A implications?
Yeah, so it was very unclear for a while. On October 2nd, the SBA put out some pretty good guidance on not just M&A implications, but implications on financings. I don't have it in front of me, but I think if you have a change of ownership of more than 20%, you needed to get consent from your bank in order to not be in breach of your loan. And in just M&A in general, you could either pay the loan back and then you'd be fine. But if you didn't want to pay the loan back, what the SBA's guidance is, so that you don't need SBA approval, is to, and I'll get into an anecdote in a moment, but is to put the loan and the interest that's accrued in a bank account with your lending bank, get the bank's consent to do the transaction, and also have your forgiveness application completed and submitted ahead of the closing of your company being acquired. And so now you've got this sort of quasi escrow account with your bank, and if the loan ends up being forgiven, it would be released to the company or the sellers, depending on the structure of the M&A deal. And any portion that wasn't forgiven would go, it's already with the bank. It just goes back to the bank. It's a pretty elegant process. And
Yeah.
I think we've had a couple examples where people have tried to implement that. What we've found is banks have been universally unhelpful from a responsiveness perspective. And the anecdote I'll give is, we were buy side on a deal in August, September, and we were trying hard to work with our target and create a situation where they could get the PPP loan forgiven. And the PPP loan was a very significant part of as to the valuation of the company was pretty significant. It was maybe, let's just say it was a $500,000 loan, and the transaction was about a $10 million deal. And normally in these deals, you deduct the debt from the purchase price.
Right.
Their bank wouldn't respond to them, and it was a big bank. It was, and their bank just couldn't get it together to get something in place that would make my client's lender comfortable. And we just said, look, if you want to do the deal, you're going to have to pay the loan off with deal proceeds, and that's tough. Especially at that. That's a tough. So what I'd suggest is, if you think that's on your radar, get with your bank. Make sure you have a contact with your bank. Make sure that they understand the process you're going to need to go through, because buyers are not going to be very willing to wait.
So in this one instance,
Yeah.
was it a case of the bank just not understanding the processes themselves, or they were not able to get any response or get clarity from the SBA?
I think it's a little bit of both. Because it wasn't our client that had the loan, we didn't see the sausage making as far as the discussions with the bank, or with the bank. The bank gave us they gave us a consent that wasn't adequate for our client, and we went back and had them try to put another one together. And then, we were going to put the money in a separate escrow account. And because we didn't want to, obviously, we don't want the sellers to have it, and the sellers don't want us to have it. So we had put it in a separate escrow account. And the bank just never really could get their gears going. I know that in August or September, as Silicon Valley Bank sent a notice to a lot of their clients with PPP loans, essentially telling them that we need SBA's approval for any acquisition. And that was pretty frightening, because I don't know how long it would take to get an approval from the SBA. That's one of the reasons the SBA put out their guidance on October 2nd is, if you follow these certain procedures, you don't need SBA approval. You just need your lender approval. But if you go outside those procedures, you should get SBA approval too.
Okay. The reason, obviously, for this question, the reason I was asking is in the event that there is, as we are expecting, a second edition of this program, it's a question of, what should the audience, what should people that have taken, what should they be prepared for? And so that brings me to the sort of the next bit, which is, what lessons were learned, and do you think that the financial institutions, the lenders, have gotten better as the months have gone by in terms of, their understanding of the processes and responsibility?
I think that they are better at it. I still think that it's to be seen how all these forgiveness applications get processed, and people start getting confirmation of forgiveness, and how long it takes, and what kind of headaches are related to that. I mean, what types of banks are going to do better? I don't know. I can tell you that a lot of banks were very hesitant to even participate in the program, and it's possible some of them might sit this one out, given the headaches they've had in the past, 8 to 10 months.
It's because, part of the reason I think would be that whether it's the forgiveness part, or even if without the forgiveness, there was going to be 80% forgiveness anyway, correct?
Yeah.
And for a lender, it meant that they had to go for that 80% or 100%, whatever the actual amount is. They have to go to the SBA, right, to recover it, because it's the SBA it's the taxpayer that's funding it. And that's probably, so the question really it'll go back to how responsive the government's going to be, and they have to provide enough liquidity in the next version of the program to ensure that banks participate, and they also need to, I assume, be more efficient with their processes.
Yeah, look, I think there's going to be lessons learned around making it more clear which type of company should take the money. I think there's going to be a smoother process for forgiveness, whatever that may be. But it's still very unclear what it's all going to look like. Hopefully it's somewhat similar, so we can leverage what we've learned this year. But it's very possible that they're going to do some other things that create uncertainty based on, again, the type of company that should be receiving the money. I don't hazard to guess what it's going to look like. I think what we told clients in March and April, and what we tell them next year is, just know that there is a lot of uncertainty on the back end of this, and it's free money in a way, but it's hard not to take that free money, but there's been enough headaches, especially on the M&A front, that you really need to consider what your next 12 months look like before you take the money.
What just sort of wrapping this, what advice would you give people that are they want to they're thinking of applying for the next version of the program for entering? What lessons have been learned? What things should they be prepared for?
I think that you've just got to understand that it's a real-time process, and again, maybe this one will go smoother based on what they've learned from the past one. And what we learned, at least on the front end, especially trying to navigate for venture capital and private equity backed clients, is that the SBA will say one thing one day, and then Mnuchin would come out and say something the next day that was completely the opposite. And just there's just that sense of uncertainty that's going to be there throughout the process. So my view is, just like the government's telling everybody, you really need that money to deal with the headache. If you're just taking it and you're going to rationalize why. There's some downside there from the SBA getting upset with you, but it's also, you know, it can create headaches for you later on. So I do think you really need the money, meet the criteria that's set out there. Make sure you've explored your other paths for liquidity, which, frankly, are probably very limited in a time like this. But if you've gone through the steps to explore that, and then depending on what the terms are, it may not be the end of the world if you end up not being able to get it forgiven, or it can't be forgiven for a lot longer than you thought, and it's got to stay on your books. But if you come to a sort of transformative event in your company, like an acquisition or a large financing, it's a headache you may have to deal with, and that headache, dealing with it may mean paying it off when you otherwise didn't want to. So it's just, I can't say don't take the money. It's cheap money, but just know what you're getting into, and know that there's going to be some uncertainties.
Yeah, and and especially here for the Austin audience, we've obviously there's a much heavier tech focus, but for those companies, they have a little bit more or easier access if they have investors, whether it's private equity or venture capital or even angel investors. So, they probably have more access to funds than, say, the normal small or medium-sized business that might be, say, in the restaurant or hospitality or other businesses that are significantly affected. Would you agree on that?
Yeah, no, that's absolutely true. And I think that's, especially for the larger loans, that's something that the SBA is going to look at. I mean, they're going to say, you had these two big venture funds that already own 30% of your company. Why didn't you go to them? And you're going to need to be able to show on the record that you did. And they said no. And
can you make the argument? Can you make the argument that we didn't want our equity to be further diluted? Would that fly?
I think so I had a client that decided to go down that path, and I hope it works out for them, because their investors wanted to put more money in at the same value, on the same terms as the last financing, which was closed like 3 months before that, which seemed like a fairly reasonable deal. They didn't want to take the dilution, so we I sent some emails, but they decided they still wanted to take the money. And I think that if it's horrible dilution, in fact, there's a provision in one of the FAQs. You don't have to take money that's going to be detrimental to your business. And it says detrimental to your business, not detrimental to your stockholders, your company, but I think you can read it that broadly. You don't need to go take, $1 million for 50% of your company when you are worth much more than that. If that's the only option on the table, yeah, go get the money. But if you've got a reasonable offer from your investors, it's the same thing they were telling the public companies. I mean, frankly, the public companies have access to debt markets and or they could do follow-on offerings, and that's dilution too. That's and they were very explicit about that with the public companies that applied for PPPs. I mean, you've got easy access to liquidity, and we don't care if it dilutes you.
Right.
So I think if it's reasonable, if you've got a reasonable offer on the table from investors, you really need to consider it strongly before taking any PPP money. And if you do both, that's going to be a real problem.
Yeah. Well, good. I think this was very good. I think I got the questions answered. If somebody has more questions, just put them on. I'll take a quick look. But Scott, any final thoughts on PPP? What do you think is coming down the pipe? What should people look out for? And especially if you have any further thoughts on the whole forgiveness process, because that's a big thing for the existing borrowers.
I mean, I think that people should try to get as close to the front of the line on forgiveness as possible. I don't know that form is going to change much. If you have a loan under $2 million, as Tejas, as you said, it's unless you did something very bad, it's very unlikely you're going to raise any eyebrows through this process, because you're probably the company that was meant for this loan, and it may take longer to get your loan forgiven than what we thought in April or March or April, but just get that process going so you can be clear of it sooner than later. but I think one of the things is that all the folks that had, scars from 10 years ago, we're going to have another program like this at some point in the future, hopefully further out than nearer, for some other reason in 10 years or so. And, I'll be curious to see how short people's memories are, because it's
Yeah.
been a headache for a lot of companies. And, you know, I think it's helped. It's probably helped, significantly more companies than it's been a problem for. But it is. It will be interesting to see how the forgiveness process goes, and it'll be interesting to see what the terms of any new program look like too, and to see what they can clear up. And they may specifically carve out certain types of companies or bring in certain types of companies. We'll have to see.
Yeah. Great. Well, Greg, Scott, thank you so much for your time and your thoughts on the PPP. And this was, most useful. And if people have more questions, send them to us as we get more information, especially on the tax implications. We'll try and let the audience know. And with that, I'm going to turn it over to the president of TIE Austin, Jashi Vakil, to wrap up.
Thank you, Scott. Thank you, Tejas.
You're welcome.
This is absolutely great. It was very informative, of course, as usual, the way you handle it, Scott. And thank you for an honest discussion, both of you. Really appreciate it. Part of it was very encouraging. Some parts were obviously not so, but that's where we are today. So that's absolutely acceptable. And hopefully our audience did get enough out of it, and hopefully, we all can take something back with this. Anyway, Tejal, can you move to the next slide? Thank you. So if you have any more questions for Scott, please send it to us, to TIE Austin, at webinars@austin.tie.org. We will be sure to send it over to Scott and get those answered for you. And we have had a lot of people think that their questions were not answered or were answered in part, or you may think of something else after the fact. So please feel free to send those over to us. This webinar is recorded, of course, and will be posted on our website under the past events title where this event is posted. So we will send out a note to all of you, and we will have it available for everybody. So please be sure to check it out if you need to refer or go back to that and visit that. With that, I want to thank all of you once again for attending this webinar. And also some of you have repeatedly been attending our webinars all throughout the year. We have had a very successful virtual event sessions this year, partly because we are going through this coronavirus situation, and that has helped us actually bump up our events. So thank you all for your support, really appreciate it. With this, we are not going to be doing any more virtual events for this year. So we look forward to seeing you in 2021. Please come back, join us for that. But in the meantime, we are not gone. TIE Austin is still functioning at full speed. So if you have anything that we can help you with, anything that we can do for you, as you have been reaching out to us, please, please, please reach out to us. We are here for you, and you all have a safe holiday season. Travel less, or if you travel safe, and stay well. And we shall see you in 2021. And thank you, Scott and Tejas, once again. Appreciate it.
Thanks, everyone.
Good evening.